Mayuresh Joshi is with us on the show. He's the head of equity research at William O'Neill. Mayuresh, today we're seeing a very large fall coming through in Tata Chemicals. Yes, it did rally, but it's 8% gone on pretty large volumes. What's happening over here, and do you like Tata Chemicals?
Afternoon, Rima. I think the market reacted initially in terms of the expectations of the Tata Sons IPO. Now it probably seems like that IPO might not come, and that entire enthusiasm for Tata Chemicals being a huge play as far as the Tata Sons IPO is concerned, that probably is getting fizzled out. And the market is now reverting back to the fundamentals that the company probably will operate out of. Clearly, I think soda ash prices have been on the downturn for a periodicity of time. And even as we speak, soda ash prices are heading southwards. Obviously, it's a commoditized play where China dominates the bulk of the market. And therefore, the stickiness that Tata Chemicals already had till Q3, a lot of their international operations had pricing and demand-led issues as well, which probably does not augur well for the soda ash business. For the sodium carbonate business in general, I think the stickiness might also continue for a couple of quarters. And so I think the domestic-oriented businesses of sodium carbonate and salts might continue on a reasonable footing. However, I think the global part of their business is where I think the pain point will come from as far as the earnings are concerned. The capex plans that they have ambitiously put out, they do need a huge amount of capex over the next few quarters as well, which probably will also mean that cash flows will get restricted to a certain extent. So I think the markets are reverting back to fundamentals, which probably are appearing very, very soft, at least for the foreseeable medium term.
Okay, that is one stock in focus. By the way, I'm just looking at the move on Zomato, and it's a stellar move, and it's happening on big volumes. We're talking about 5% of an up move right now, and volumes are pretty high, 44. Yeah, we're looking at over 44 crores, I think, trading around in the market today. So let's just pull up the longer term chart on Zomato. The stock is practically at, its 52-week highs. 175 was the high. Then there was a small correction. And today it's sitting at 165. Of course, the buzz has been more than earnings or anything, relating to the valuations. The buzz has been more about the launch of the veg-only delivery and then I think the U-turn on that. So, Mayuresh, let me bring you in. Not sure if the green costume, or the green uniforms or the red uniforms, veg, non-veg, had anything to do with the price moves today. But it's been a stellar one-way rally. I mean, literally a one-way rally in the last 1 year. The question is, do valuations still leave more upside on the table?
I think valuations are a little bit on the high side. Afternoon to you, Surbi. And a clear disclaimer, we hold these stocks from much lower levels. So I might be a little bit biased, but remain optimistic on this story. Valuations a little bit stiff at this juncture, but a large part of their business, specifically the Blinkit and the Hyperpure business, as the numbers improve in the next few quarters, where the assumption is that they will, and break-even status might get achieved over the next 3 to 4 quarters, as the management is indicating. I think that can be a huge turnaround in totality for the whole consolidated numbers as well. So the core delivery business, including Blinkit and Hyperpure, if they start turning around in the next 3 to 4 quarters, obviously the kind of growth that one really expects can be quite significant. And the last leg in terms of the tailwind, in terms of the entire consumer discretionary story over the next few years, if QSR players are expected to grow in terms of both volume and value in the next few years as the consumption story grows, aggregator platforms will also have their fair share of growth coming through as this growth seeps in. So yeah, biased, but remain optimistic on this one.
Have you looked at the IIFL or given it any thought? It's basically lost about 50% of its market cap since the RBI notification came, imposing restrictions, etc. Mayuresh, any thoughts?
Afternoon, Prashant. I think a bulk of their business, which has now come under RBI surveillance, and what happens to that part of the business is really an unknown at this juncture. And therefore, I think the earnings are going to take a significant amount of hit till a point a resolution probably comes through, or there is some element in terms of a clawback in terms of the RBI directive as well. I think both seems to be very probable at this juncture in terms of the corrective measures that can be taken. But to a large extent, I think the hit on the business is going to be very, very prominent and that is getting reflected in terms of price. As far as the price damage is concerned, Prashant, I think a large bulk of the price damage is done. But whether I'm ambitious to get into the stock at this juncture, I think there are far better plays in the NBFC space, considering what IIFL is going through the regulatory issues.
Okay, all right. Mayuresh, we'll leave it there. Thank you very much for the conversation. Appreciate you joining in here on Closing Bell here today.